Hey Cryptoverse, welcome to this episode of Crypto Baptist. This show highlights everything about institutions getting into crypto. Today is February 26, 2021, and I'm your host Dan. Hope everybody had a good week. It was a volatile week for both crypto and for the stock market. For us crypto investors, we're used to this volatility, so it doesn't really get us excited. Hope everybody's okay and survives to trade another day. All right, first off, we have JP Morgan waving the white flag and capitulating pretty much, now saying that they recommend people to have at least 1% of their portfolio in Bitcoin. Remember that JP Morgan's Jamie Dimon said that Bitcoin was a fraud and that it's not his cup of tea. Well, now his firm is recommending that everyone should have Bitcoin. So there's that. Bitcoin is inevitable, and we're only going to see more institutions, banks, advisors recommending people to have Bitcoin in their portfolio. Right now, there's a big stigma with cryptocurrency. They always err against it due to the volatility, but it's getting harder and harder to deny cryptocurrency and miss out on all the gains. So all of them are going to be capitulating and recommending crypto in your portfolio. And from JP Morgan, now we have Citi saying that Bitcoin is stealing gold's thunder, and that's true, right? We're seeing it in the charts. Don't forget that back in late 2020, Citi also said that Bitcoin is the 21st century gold. So when we look at the chart, here's gold. Right now, it's in a downtrend. In this environment, as a hedge, it should have been going up, but due to Bitcoin, it's actually heading down as people are flocking to Bitcoin as the new gold. And from there, we have Square CFO on a call with CNBC saying that they believe that Bitcoin can become the native currency of the internet. And that's why they are backing Bitcoin. And that's why they purchased another $170 million of Bitcoin in their last earnings call. We have another Ethereum ETF formed. It's in Switzerland, and it's going to be under the same ticker as the Grayscale product. And then we also have another Ethereum ETF. This is filed by CI Asset Management in conjunction with Galaxy. And Bitwise, they are a digital asset management firm. They are the creator of the 10 Crypto Index Fund that tracks the top 10 cryptocurrency. They announced that they now have $1 billion under management, and they service to rich clients and institutions. So that's good to hear that their crypto products are gaining in popularity. They have the 10 Crypto Index Fund, the DeFi Fund, and the Peer Bitcoin and Ethereum Fund. Now, the only one that's currently traded publicly is the BitW, the 10 Crypto Index Fund. The other ones are still only for private clients. And Coinbase filed to go public via a public direct listing. Now, that's different from an IPO process. With a direct listing, you're not raising any new money and you're not issuing new shares, which those two things you're doing with an IPO. So basically with a direct listing, they're just listing their existing shares onto the public market. Now I'm hearing in the private exchanges that Coinbase is being traded around at a valuation of $100 billion. That's a tenth of the size of Bitcoin's market cap. I disagree with that. I don't think Coinbase deserves that rich valuation. I mean, it's just a plain vanilla exchange. It's just buy and sell on there. They don't even have staking, earning interest. So why are they worth $100 billion? They did about $3 billion in revenue and $350 million in net income. That does not justify a $100 billion valuation. Back in January, before all of this, they were floating around at around $60 billion. So how do you slap on another $40 billion just because they're going public? That's just ridiculous. In my opinion, it's a no for me. I'd rather buy Bitcoin. And lastly, I have Mohammed El-Erian. He is a well-known and well-respected economist, and he issued statements on Bitcoin. Now, he said that central banks should be concerned about Bitcoin and they should learn how to work with it because it cannot be ignored anymore. And it's due to who's involved in it. First, we have the groups of people who believe that Bitcoin will become the future currency. And the second group are people who are using it as a hedge, as a replacement for gold. And the third class are speculators and traders. You know, they're always there. So Mohammed is saying that central banks need to work with Bitcoin and maybe learn to regulate it because it's not going away. It's going to be part of our, or if not, it's already a part of our financial system. So they need to learn about it and understand it and work with it. It can no longer be denied. All right, everybody, that's all I have for you this week. Take care, have a good weekend, rest up, and we'll have at it again next week. Take care.